know what time it is. I got your trade highlights for the week. Today we're gonna do something a little different. I really wanna hop straight into the charts and show you guys how, and just walk through, and you all get to see with me how I was trading today, the accounts I blew, the terrible trades I was making, the all that stuff, right? And then you'll also be able to see the good and how I was able to maintain a positive attitude and make the adjustments I needed to keep myself in the game, preserve capital, and start to build back up in the right direction. So let's hop right into the charts. All right, we're gonna hop straight into it from here. There you go, Montego, let's go. All right, so as you can see, this is not the best looking chart. This is one of the accounts I started with after I blew my accounts. So we're gonna get right down in here into it. As you can see, what was this at 5:30 today? Charts just tanked something crazy. Now look, guys, let me tell y'all something about this. If you don't know already, this is where a lot of accounts could be made or broke, right? Broken. Now on this trade, you actually, like with the kind of accounts that I'm trading, you really don't want to be in trades like this. It can go in your favor, but it can also completely go against you. And what I mean by that is, let me show you, right? So number one, let's see how big this trade is. Let's say you took this right here, right? And you put your stop here, right above that last high. Boom, this is like a 1, 2, we're gonna say about 1 to 20. 1 to 20, this is about a 1 to 20. So with the Apex prop firm I trade with, right? The reason why you don't even want to be in a trade like this is because you have a trailing drawdown. That trailing drawdown could get potentially blown in something like this. I didn't see how this actually moved when it did, but a lot of times if you get a big wick like that, sometimes you get a nice flowing candle that just goes straight down, and then other times you get these heavy ups and downs. And hopefully you had your risk management set well so that you're not blowing the account. One way you can help yourself in this situation is by, in the trader-based settings, you can go in there and you can actually, what's the word I'm looking for? Set the risk settings, right? You can set your risk settings so your account don't get blown for like your daily loss limit, and then you can also set your daily profit targets or weekly profit targets. Same thing on the risk side. You can set weekly risk limit or loss limit or a daily loss limit. So that might protect you a little bit, but you actually don't even really want to be in a trade like that, because those ups and downs, you're going to feel it first. The anxiety that is going to cause and all this other stuff. So you want to be careful about that, right? And so let's go in here and we will see, right? Check my trades. So you can see, what's it say? We took this first buy here. We was in 10 micros, basically one mini contract. Where did we get out? We got out at 720. We got in at 707, got out at 720. That's about 13 points. 13 points times 4 is about, what's the 12, 52 points, 52 ticks. That's 52 ticks caught right there. This one right here, we in 10, another 10, 730, 727. Boom, we got it at 726 and 720. I don't remember whether that was a loss or not, but I just wanted to come in here and see. I'm sure I got it right in, right out, because I didn't want to tell you, I wanted to have minimal drawdown. And then you see here we took a buy here, another 6, took another 4 here, and then maybe there's just when they closed, and then you see those close for losses. You can see those close for losses. You see those close for losses. See those? Those actually close for losses. Then we took another buy here. Look at this. 669 and 674. We closed on at 667. That seems like a loss that we took right there, and another loss we took right there. Okay, now we're down. I'm down heavy in this account. I'll show y'all the video. As you can see, we came back here, took a buy at 705, closed it at 706, scored 4 ticks, took buy for 2. So at this point, you can see that after taking this loss right here, or these small, actually the loss started here. We sold 10, we sold 10 here, we sold 10 at 67, so another 10 at 664. Price came as far as down as 647. So that was almost 20 points. We would have scored right there with being in 20 micros or too many contracts. And then those turned to losses. And the reason why those turned to losses is because we didn't close in profit. We let the trade turn around on us. This is where I did not see a clear head and shoulders pattern set up. And if you see on my previous episodes, you can see where I've talked about the inverted head and shoulders setup, right? Which is happening right here. And I talked about this in my trading journal today. As you can see, I do this all the time. One way I wanted to start to improve my trading journal was by taking screenshots, taking shots of this, screenshots of that, and then putting it into my notes. That's how I'm doing it for now. Eventually, I'll probably get something like TradeZilla. I should probably just pay for it for the year. As a matter of fact, that's something I'll do. I just like the handwriting. I mean, what I can do is handwrite, screenshot, drop it in there. So I have the stuff I have to put on my walls and stuff like that so that I remember, right? And then you come, let's keep on going. So as you can see, that totally went in my favor. I was kind of beating myself up about not taking this close when I was down here, you know. That's where, you know, I'm focused on money and not seeing like, hey, this is my setup that I usually take, you know, I need to get out of there. You can see there was another head and shoulders pattern here as well, where boom, made the move, you know, and it's not always a big move. This one was pretty big though. You can see if you would have taken this one. I do have trade highlights for you guys too. I just didn't want to show those more than I wanted to go through here and just talk about the trades I was taking, because this whole ordeal, this segment, this part of Rise X, the reason I'm doing these videos is to improve my trading and to document this process, right? Because since I've stepped in the futures, I've seen nothing but improvement. No matter if it's a bad day or a good day, I've seen myself go from not winning trades, not passing account challenges, to constantly passing account challenges. And now we're just waiting to get that. We're not waiting, but we're working towards receiving payouts consistently, you know, to start to build our own personal accounts and, you know, reach all the other goals I've set, right? All right, so here we go. Yeah, so on this trade, this would have been at least a 5-to-1. This other one here would have been, and you know the thing is too, it's like we need that signal counter, which is usually something like this. That signal counter is always something like similar to a doji or or like a doji, or it might be like a hammer or inverted hammer. Matter of fact, we look those up. We look up the handle candlestick patterns. The handle candlestick patterns, which you have hammer and inverted hammer, and then you have. Let's just do it right now. You have hammer and inverted hammer candlestick. Boom. All right, cool. So this is an inverted hammer here. Show my images. So we have right here, we have the inverted hammer, which is like a bullet signal, and we have a this is shooting star pattern, which is similar to a inverted hammer, but in the opposite direction. And then you have the regular hammer patterns, right? So where's the normal hammer? Inverted hammer, hangman. Where's the hammer? My hammer is right here, right? So you have the hammer, boom, boom. See, what I would like for them to do on this one, right? Like here, they told us that it was pretty clear that when you get this same inverted hammer in the bearish signal, is a shooting star, and that shooting star is a bearish signal, but the inverted hammer is a bullish signal. So we want to see the regular hammer. They calling this one a hangman, but this will also be a hangman is also a hammer, right? Just like the inverted hammer, except in the opposite direction, and you see the signal you get, right? So let's go back to our setup that we were looking at, and right here we get more of like a doji, but I think it's also a you can see a couple things going on here, right? I think it's also a signal for an exhaustion of price going to the downside, but you can also see here, which I really want to turn that to something you can see a little better. Let me see if I can. But what you see here is, if we could zoom in, right? What you see here in this little purple box, which you can hardly see on here. Maybe I can turn the brightness. In this purple box, what you see is that there's a fair value gap. I think this thing touched the 50% mark, or didn't even come to the 50% mark before it. Let's see, the 50% mark would be the 50% area right between those last two wicks, right? And then it would be this wick. So it touched the 50% mark and then continue upward, right? That's an ICT move. I'm gonna be real with you. ICT move. Oh, that's why it's looking like that. Let me move this thing. Alright, cool, that's out the way. Alright, that was a bigger purple fair value gap on a larger time frame I was looking at. And as you can see, touch the 50% mark. We could mark that as a signal. We'll write that down. 50% mark touches on fair value gaps. 50% touches on the fair value gaps as signal / confluence. Typically what we want to see is like, because it's like, what was our signal over here? If you go back to this side here, boom, boom, and you take that down to this area, right? That high up there, I wouldn't even want to set my stop loss this high. I'm like, if that thing come back above here, I don't even want to be in this trade. You know what I'm saying? I don't even want to be in this trade because there's nothing. I feel like it has no reason to come back up here. If the trade comes back up there, probably want to be out of it. Potentially, it could come back up to here though. But this one as far as here, which is basically filling another fair value gap over here, right? Here's the other fair value gap. The reason I wanted to bring up this side was because Apple Watch keyboard notification. Cancel that. So the reason why I want to come back to this side, we want to see what type of signals we're seeing, right? And so to me, you have the biggest signal I can see, right? Obviously you have this one right here. Well, you kind of have both of these. Both this yellow and green candle in there, right? I know it's a lot of OSD going on here, but on-screen display information. You can see that green candle here, which the blue dot is. I'll get that out the way. You can see this green candle here, and then you have this white one, right? The white one is at a slightly newer high, but it immediately comes down. And so with that, right, you also have this double top going on. A double top, which I will show you guys. Hold on, man. It's giving me problems right now trying to make it smaller. Alright, so you got this double top. I'll just clone that really quickly. There's a double top going on. With a double top, we'll talk about. Let's go to double top. Come on, I like for. Let's just go like that. Oh, double top. What's the pattern? Boom. All right. You see the double top is a bullish signal. You can see multiple occasions where it is a bullish signal, right? And you still see those candle patterns you're getting over there. It's getting that same similar candle patterns. I don't know if y'all can really see that, but you know the thing I was gonna trick. Yeah, you can see the double top candlestick pattern. There's a similar candle here. Let's see if you can see that candle on other occasions. Kind of similar there. Here's a good example of double top of your USD formulated as long as just couldn't bully the pair higher. Such failure. So you see that it's that touch of, it's that double touch of resistance right there. It's the double touch of resistance here. Boom, it's the double touch of resistance here. You can see I'm marking off on my little, you could have got a 4-to-1, or if you just want to be less risky, almost a 2-to-1. Almost you wanted to less risk, 4-to-1, you know, almost a 1-10 if you know had a small stop loss. Boom, boom. And you know what, man? Today I was like, I quit. I said I quit. And what I mean by quit is like, I mean I quit. I'm quitting the FOMO trading, the over-risking, the over-leveraging. Like, I'm going to set plans and stick to those plans. You know what I mean? We want to stop all of the constant. It's like, you don't want to keep making the same mistakes. That's not what I want to do. And you don't want that either. You don't want to keep making the same mistakes. We want to see profitability. I think for most people, I feel like if you're trading, you're probably wanting to replace your income and potentially in its highest forms, allow this to create financial freedom in your life, so let's just continue on. This was, like I said, this one was a really big move. This one right here, off this signal, which we're looking to start to kind of create here. This was a pretty big one right here. It's still a 1 to 4, and you probably could have like had a tighter stop loss potentially, somewhere up in there. I would say right below that fair value gap there, right? And then look at how crazy this thing went. You know what I'm saying? You really could have rolled that. I don't know if you would have wanted to sit through this drawdown, especially after it broke under the 20 and broke under the 50 EMA. You probably have been like, nah, I'm out of here. You know what I'm saying? But that depends on how you track like. So if you have a goal to make, I don't know, 1,500 this day, or to catch, I don't know how many points was that, you can secure that with a stop loss and then leave a runner, so you can, max out, just maximize that trade potential. You know what I'm saying? Overall, we were looking for this thing to fill this overall gap that it made today right here. We was looking, I don't know how many, if y'all have been trading for a little while, this is very common. This is very common with news. Price tank, it just takes it goes and just starts to fill that back in. What it does after that, we'll have to stay tuned to find out. So let's move. You know what? I think we're just gonna close out here, guys. Actually, before we close out, I want to talk to you about what I did, the adjustments I made, and to preserve capital and put myself back in the game. Because I'm talking about, we were down as much as, I only had as much as $96 left in my trailing drawdown. So you know what I did? Reduced my risk. I reduced my risk because don't be confused by having a 50K account, 25K, 300K account, 150K account. Don't be confused. What you actually have to trade with is what you have in the trailing drawdown. So I pulled out that laptop because I blew all those accounts. When you see them taking 20 contracts and more, that's how I blew the account. I went and grabbed that laptop. I'm doing all this stuff on iPad. I be trading from the iPad. I went and grabbed that laptop. I got on TradeObay, and I had that trailing drawdown up in front of me so I can see what's going on, how much I'm working with, and then we take solid positions. And we want to make, like, I don't know, 20, 50, 100%, close that, secure that. If it runs, set a stop loss, or if things still have room to run, set a stop loss, allow it to run. But you need to secure some profit has to be secured so you can start to build your way out. Another thing I didn't do, number one, is one of the number one things you should not do is getting to this downward spiral of now you're losing trades and now you're beating yourself up and talking bad about yourself. Nah, you got it, right? Reduce that risk. Use this little button right here. Boom. Create new order. Watch this. I can set a TP for up here. That's a fair value gap I'm looking at. I set my stop loss here. And then how much do I want to risk? How much you want to risk? You want to risk, if I got $96, I don't want to risk no more than like $20 or something. Watch this. Let's say $20. Boom. Not possible. All right, that's way too small. Let's say 50. Boom. Okay, cool. Maybe I don't want to risk no more than like 30. I know I can go and make 30 real quick, right? No, I don't. So you gotta at least risk 50, right? So whatever, you know what I'm saying? At least have 50 in the box and I can move it, adjust it to be 30 or more or less, you know what I'm saying? So it's very possible, right? And then look, that's, I'm catching 432 ticks or some odd amount of points. That's significant compared to what you got in drawdown. If I just wanted to double or take 50%, right, off that, that's an easy move to catch. And that's right at another fair value gap. That's like, what is like a 1 to 2 or something like that? Almost. Not even that. It's like a 1 to a 1.25 or something like that. You know what I'm saying? So small wins, base hits, done deal. And last thing, guys. So I am starting a new segment on here where I'm going to be adding in options trading, right? And I want to show my progress and the plays I'm in and some of the work I'm doing with that end, right? Just to document my process, my trades and stuff like that. So currently we are in 2 trades, one with Hood and one with Tesla. I am in a Hood $75 call, 75 strike price call. Expiration date 3/7, which is set to expire here soon. So we probably won't hold that one long at all. That expires at the end of the month. That is pretty much cool with me. We're gonna take that, and we are right now we're up. You can see we're up 10%. I paid $55 for this call. Its value is $61. Expiration date 3/7. I'll get this thing a couple of weeks. I at least want to make like 50% of my money, maybe 100. We'll see how that goes. I wish I would have got it out a little longer, but maybe we'll end up rolling this position. We'll actually see it. Matter of fact, let's look into it now. Roll position. Start rolling. Let's see. Select a new position. I want to go out a little further. $88 call. 69%. Let's go out a little further. What about April? Yeah. I think Hood is a hot company, so they were getting a little expensive. I didn't have much to put in there this time. Like you can see, we have $27 in buying power. Let's see. We had $27 in buying power. We rolled a position into Tesla that we had. It was in like $80. It was down heavy. So I knew it was down heavy. So I was like, I should probably get ready to buy in. So in Tesla, we're up another 9%. Right now, up $17. I paid $176 for it. I have one contract, and it's already up $17. I expect Tesla to really go far with this thing. And you see this expires in May 16th. So this is what's going on with that. I will later start to get into what the Greeks mean. We know the delta. It basically means that for every dollar or so this thing moves, it's actually more than that. Let me get back to you on specifics about how it moves. Matter of fact, let's look it up together really quickly. Let's look it up together. Let's check out. Look at that Investopedia right there. Let's do this. Oh, this thing right here sometimes. I don't know why it don't be like highlighting the whole thing. What is delta in options? Boom. Cool. In options trading, delta represents the estimated change in an option's price for every dollar movement, which I was about to say earlier, in the price of underlying asset. Essentially, it shows how much an option will move in value if the underlying stock prices goes up or down $1, right? A call option, here's an example. A call option with a delta of 0.5, if the underlying stock price increases by $1, the call option price is expected to increase by 50 cents. Cool. Put option, same thing. For every 0.5 it goes down, for every dollar it goes down. Or it says, so you will want it in the opposite direction, right? So it's going to be negative 0.5, right? So if it has a negative 0.5 delta for every dollar, the stock price basically moves down, then you will get a increase in your options trade or the options contract value of 0.5 or 50 cents, right? Let's see, range at the money, interpreting delta. Higher delta implies a higher probability the option will be in the money at the expiration date. In the money is where you want the contract to move. So if it has a higher delta, it's more likely you have saying your chances are increased, basically, that this thing is going to expire in the money. You're going to make profit. All right, call option delta ranges from 0 to 1 positive. Cool, that's awesome. While put option delta ranges from -1 to 0. That's some good data right there to know. Delta 20 is suggested. What is this saying? The absolute value of delta also tells the approximate probability the option will finish in the money. For example, if the option has a delta of 20, suggested it has 20% chance of finishing in the money. A delta of 50 suggests it has a 50-50 chance of finishing in the money. What is a good delta for options? In the money, it's in 50. Find options that are at the money having deltas of about 50 to more in the money. The option is closer to 1 the delta is. Hey, I like how that sounds. What does a delta of 1 mean? Response in terms of dollars, actual win. So I guess that also means, I wonder if that is determined by, like, is it saying each contract? Because when you buy one contract, it has 100. It's basically 100 shares in one contract, right? And so I'm wondering if that means that each one increases by 50 cents or so. Because if I am up, let's go back. Oh, y'all can't see this. I'll block this out. If I am up by, let's see, if I am up by, it says I'm up 9% of $5, right? This thing has moved from, where has it moved from? And how can I tell where it moved from? Let's see. Can't really tell, so I will have to know where the stock price is moved from. But I bought it at an average of 55. The stock price is up today. How much is it up today? Today is only up $2, but I'm up $5. What does that mean? Guess we'll find out eventually. Hey man, look, you don't know how your cell phone works, but you know how to use it. That's all that matters, because I've definitely made profit in this plenty of times. So, which is why I wanted to add it in here, is I really want to start to grow in this area. So, hey man, again, that's your boy Monteo Ramon. That's all I got for y'all today, man. Rise to sex, rise to the occasion. Y'all have a blessed day. Make sure y'all get in that gym, read, drink water, plenty of water, eat some food. Have a blessed day. Peace.